Hi everybody, Alex Deployer from Expert Forex, and this is a recording of the webinar held on the 9th of April. It's Thursday, and we really got into some interesting stuff here. We discussed invisible support and resistance. We reviewed a previous live deals results, did a post-mortem on that. We reviewed a big missed trade opportunity, 230 pips missed. We did an analysis of the current markets. We discussed candle formations and their role in the trade, in the entry decision. We found a positive divergence example, and we also found a straddle opportunity. So I hope you enjoy the recording of this webinar. Okay, right, let's shoot off. It's 8 o'clock in the morning in Australia, various times all over the world. So yeah, let's get shooting. I see there's quite a few people in the room for this time of day, so that's great to see. As always, if you do have any questions, comments, remarks, please shoot them through. I'll deal with them as best I can. I remember last night I missed one of the questions and I didn't answer it, and the person that asked it unfortunately is not in the room at the moment, so I'll have to do an email to that person. Okay, let's shoot off now. I think the first thing to look at is we had a deal going yesterday, and we had quite a nice debate about what to do about the deal, whether to leave it or whatever. And let's go and have a look how that deal in fact went. Unfortunately, it was stopped out, and what I'd like to do is actually reconstruct that deal. And I'm just going to open. Oh, all right, I'll share the screen. I always forget to share the screen. Okay, so I'm going to reconstruct that deal. There's my account. You can see that the one deal made a small profit, the other one made a small loss, and in fact, I just walked out of there with a few dollars in the pocket. But let's have a look at the actual deal. So I'm just going to pull onto the screen a Aussie chart, and we will, let's see if I've got a template for candles. Yeah, that's much better. And there we go. All right, so there's the deal. And I'm just going to reconstruct it. The reason for entry was basically a bounce on resistance. You see, there was the resistance line. It bounced beautifully there, and then went down. And the other reason why it was entered into was because the RSI, whoops, no, it was actually over there. The RSI was in a very bought environment there. Let's have a look. I'll just draw a line to show that level. Okay, so it was in quite an overbought environment. Now, when those two conditions come together, RSI is overbought and it's hitting a resistance line, then that's a good area to enter. And then I entered there, and then we had the debate whether to top up or whatever, and I eventually ended up topping up, and then it reversed. So first of all, I'm not sure if everybody knows how to reconstruct trades from your account, and I'm just going to show you if you don't know. And I'd like to get some feedback if you didn't know it. If you didn't know how to do this, let's get some feedback. So all you do is you actually just highlight the deal and you pull it onto the chart, and you do it. And I'm going to do the second deal, highlight the deal, and pull it onto the chart. So I'm going to just make this bigger to make it clearer. So what it then does is it there's the first. Oh, okay. It's not very clear. There's the first deal. That's where I entered a sell at that point. And what it's saying, you got stopped out over there. So obviously that was a positive deal. And then I entered a second deal, and it looks like on that candle there, and I got stopped up 2 candles later, which is the 1 hour. So that's what happened there. So that's how you reconstruct a deal. And thanks for that feedback. And it's also it's a good thing to do, even if you're using EAs. Reconstruct your deals on EAs, and you say, is it the right place that the EA has taken the deals, or are the stops too big, or the entries too fast? That kind of thing. It's really handy to know how to reconstruct the deal. Anyway, so this one went negative, and it just looks, this looks interesting. I think Fibonacci people would love this one. So let's just have a look at what Fibonacci people would say. Now, is everybody aware of invisible support and resistance? Now, and you, that's what I call it, invisible. You might not, it's not a technical term that is well known, but I call them invisible support and resistance. Invisible support and resistance is calculated support and resistance. So in other words, pivot points are invisible because they're calculated. Fibonacci is invisible because it's a calculated support and resistance points, and that kind of thing. Okay, so let's have a look at Mr. Fibonacci, and we'll do, I never draw them the right way. Yep, I did it the wrong way. I think, in fact, MetaTrader itself, I don't think it has the right approach, but anyway, so there's the turning point, and there's the starting point. All right, so Fibonacci traders would just love this deal because they'd say, oh, look, there's the extension, and then there's the retracement, and it hit exactly on the 61.8 line, boom, boom, and retraced. So that's what I mean by invisible support and resistance, because it's a calculated number, and they would say, oh, look, we were right at that particular point. But that's just interesting to know, and also interesting to know that when you're in a trade, always be aware of where the Fibonacci levels are, because there are a lot of other people watching them. And then what they would say is this trade, the target for this trade is over here, which would be quite interesting if it in fact gets that far. Okay, right. So thanks for those questions that came in. Okay, so so that was the deal. Now, so our decision at this point, where we entered the second deal, there we are. At that point, we said, okay, we are 50 pips positive. What do we do? Do we just watch the deal? Do we? Well, I did move the stop to better than break even at that point. What do we do? And I think the consensus around the table was really just leave it, let it run for the to the target. So I decided to top up. In other words, add another deal to this trade, and then obviously what happened is it just reversed. But we did do a thorough investigation on the daily chart, on the 4-hour chart, on the 1-hour chart, and I think we even looked at the 15-minute chart to say that overall we're happy with a sell approach in this particular area. So that's what was done. And now I think the point here was, even if I didn't top up, even if I left the deal just to go, or even if I had put a trailing stop, the results would have been the same. It would have hit my break-even stop at the top there. The trailing stop wouldn't have activated much, maybe have added another 10 pips to the trade. But in general, unfortunately, that bounce was just one of those things. The other thing is that we mustn't underestimate the danger or opportunity of an opening market. So what actually happened there is that the US market probably opened over there and changed the course of mankind, as it normally does, and that's why suddenly the US dollar strengthened. The Aussie strengthened, the US dollar weakened. So Okay, so that's yesterday's trade. Any comments on that? What in retrospect, what could we have done? Cashed in where it was is obviously the optimum answer at that point. All right, so let's see if there is there proof to cash in right there. I'm just going to labor the point, but it was at a. It actually did bounce on a support and resistance level. If you look at that, that is a support and resistance level. It did bounce. So I used this. It did the same thing as the argument that I used to get in. So it bounced on resistance. So there it bounced on support. So let's do. You always have to do a post-mortem on a deal to learn from it, and that's what I'm trying to do here. How could I have avoided? So if I had seen that, maybe what I should have done is taken off 50% of the deal at that point and say, when it reaches that point, there's a likelihood of a bounce, and therefore I want to cash in half of my deal. That would have been another alternative. At that point, the RSI was still rising. Yes, that's the RSI was rising, and at that point, well, at that point, the RSI was going over the 50 line. So bear in mind, this is the 1 hour. So what we're saying is the 50 line was over there, and the RSI was going over the 50 line, a warning that possibly there could be a reversal happening. And I didn't take the fib. I don't really trade the fib because in other deals they would say it would bounce on the 38. So they, oh look, the fibs worked, it's bouncing, but they can't tell me whether it's going to be the 61 or the 38. It's fibs are very inconsistent, but they are guidelines. They are guidelines. I mean, in this case, it was perfect. Let's have a look. There's another one that looks almost perfect. Where's the fib? Yeah, that's. See, there's another 61, exactly 61 bounce there. But then you look at this one, and this was a 38 bounce. See, 38. So I battle with the consistency side. You know, do you just take every 61% bounce, or do you take the 38% bounce? You know, I studied Fibonacci. I studied it under Mr. Fibonacci himself, market traders, and spent a lot of time with that guy and Martinez. And in the end, I came to the conclusion it is too inconsistent, but it is a good guide. So you take it into account as a factor. And remember, last time I mentioned that what you do when you're taking a deal, you using the balance of evidence. So when I went into that deal, there was a lot of evidence for the sell, and you just got to do that. But you can't overanalyze deals. This deal was taken on the 4 hour. There's the 4 hour chart, that particular deal. So I was expecting a double top. So there's a top, there's a top. So I'm expecting it to go at least to this level here. So you've got to, when you go into the deal, you've got to decide, are you trading the 1 hour chart or are you trading the 4 hour chart? Otherwise, if you dial down on the 1 hour chart and start looking for, because as we've seen, most good RSI trades have two waves. They've got like this one's got 3 waves. So you've got to give the price chance to form waves. So it had gone down. It had the right to, let's say, form a second wave. So I don't mind those retracements, you know, because it's forming the second wave to go down. So in this case, it didn't. You see, there's no second wave there. So those are the kind of things that happen. All right. A valid wave 5 on. Oh, okay, that's good. All right. Just one question that came in, which I'll deal with. I think there was a question about candle formations. Yes, candle formations I do take into account, because candle formations basically give you the sentiment that's happening in the market. It tells you the story of the battle between the bulls and the bears. Spikes in particular, like those spikes, are pretty telling. Tweezer bottoms. Those kind of things. But again, I don't trade that signal itself. I just say, look, the market is rejecting that level. Let me see where I can get in. And I don't actually take the candles into account. I just say, here's a confirmation that the sentiment is up, or something like that. So I do take candles into account. They're very important. You should watch them. And you know, for instance, that particular trade over there, I was aware that there were a lot of blue candles. Look at just blue, and my as a retracement trader, I say, oh, there's a lot of blue candles, so let's get the price must is going to get tired soon, and that's why I took that trade, because I found a good excuse to do it. Okay, so I hope that answers your question. There's some really good candle formations, but they are a bit lagging and sometimes inconsistent. You know, I think there's a morning star. There's a morning star. You know, that's also some form of candle formation. I don't remember the names that well, but I can tell you what the sentiment is. You know, you can see the rejection over there. So candles do play quite a nice role, and I think the colors help to you know, get your thinking right. Let's just see. There's quite a lot of discussion going on, so let's have a look, Michael. So again, candles are not an entry, or let's say the prime entry reason why we trade. They are a confirmation reason why we trade. Prime entry that I would trade is either a support and resistance bounce, or a breakthrough, or something like that. That's most probably the prime reason. So over here, if you take my this trade that I did here, the prime reason was a resistance bounce there. That one was a resistance bounce. That was the prime reason. I did look at the candles and said, oh, they're all blue, which means they're trending up, and I said, right, that's a good excuse to trade against a trend when it reaches the resistance level. It's like catching the falling knife type of trade. Again, the fibs, I would take the fibs into account in certain trades, and I like to take them into account where they are confirmation. So let's have a look. We're bouncing around here, but that's good. I think discussions. You see that is a fairly good support and resistance level there. It was support there. It was a resistance there. It was support. Resistance there. Yeah. So that level was quite a strong one. Now, if it coincides with a fib level, you call that a confluence. It's like, think of it as a brick wall. If you've got one brick wall, which is caused by that support resistance, and you've got another brick wall that's created by the Fibonacci ratios, so that's a double brick. And then let's say you have another brick wall, which is by trend line. So there's another, let's say there's another brick wall. So we've got 3 brick walls there that the price has to get through, and that's most probably why it bounced. So that's why it's very important to do what I call post-mortems. On every single trade, you need to do post-mortems so you can analyze what you missed. What didn't I see in that trade? Now, I didn't see these things last night when we were talking, but now I can see them in the light of day. I can see them. All right, let's see. A lot of questions. Thanks for your participation. Why do you look at it? Do you ever look at Ishimoto? I don't even know what that is, quite honestly. What I did when I started out, I investigated every single indicator, and I just disregarded like Fibonacci. I didn't just look at it. I really traded it for a long time, and after a while I just found it too inconsistent and I left it. Now the same thing with that one. I looked at it and I found it too inconsistent. The other thing that I do when I look at indicators is I look at them and I look at the RSI at the same time. And if they are giving the same signals as the RSI, then I say, well, it's just confirming the RSI, so I'll just use the RSI. That kind of thing. So when I evaluate a technique, I actually compare it with all the other techniques that I know. And then what that does is it's a hang on. If 8 times out of the 10, this particular technique confirms all the rest, then I must use that technique because it's the most consistent technique that there is. So that's my view of these various techniques. In fact, if you take that Ishimoto, I don't even pronounce it. If you take that technique, you'll most probably find a huge overlap between support and resistance, non-horizontal support and resistance, which are trend lines, and also you'll find invisible support and resistance, and you'll find other techniques. Moving averages. A lot of techniques are just a deviation of moving average. In fact, I can make the RSI look like, I think I did a video of that once. I can make the RSI look like a moving average. In other words, give exactly the same signals as a moving average. All right, let's have a look. Anything else? Now, the other thing I'd like to the other thing that I'd like to do in these sessions, if you see me do something on MT4 that you don't know how to do, like for instance the dragging of the transactions back onto that, then please tell me and I'll show you. Just because a lot of people don't ask that question and then they don't know. For instance, part of what we're going to do today is we're going to look at the stock market, and what we're seeing is more confidence coming into the stock market. We can see the US 30 going up nicely, the NASDAQ going up, and Japanese going up, and Germany going up, and the FTSE and SPY and Aussie. So on the whole, more optimism, more confidence coming into the markets. I think either people are now getting used to the situation we're in, or there's true confidence that a solution will be found and that the solution is working, that it has been put into place. Now, for instance, here's an example. Does anybody know how I made the chart look like this? And what I need to do is, there's a clue. How did I make the chart look like that? All right, so yeah, there's a few guesses coming in. New chart, Aussie, boom, boom, boom. Getting closer. Getting closer. It might be pretty close as it is. Okay. And then all you do is you add. Now my menus are missing. This is a funny thing. Let's see if I can add text. Okay, text. There's a text, and you just color the text. What you want. And boom, there we are. So that's how I got that. And then to get rid of that is foreground. You just do black. Okay, so that's how I got there. All right, it's a bit of a meaningless exercise, but it just shows you, you know, what the charts, what you can do with the charts. That's because it's pretty handy having that there. Okay, so as we say, we've got more optimism coming in, and as I said in the previous session, the charts are becoming more tradable and that type of thing. All right, I just want to see. Okay. You came up with the 4 period as the best RSI based on all your testing. Yes. Sorry, there's a lot of questions coming in, so I'm going to just address them randomly. Let's take this away. The 4, I have explained it previously in a webinar, is why the 4 is that it gives the best volatility of the indicator. So in other words, it goes down a lot and goes up a lot, goes down a lot and up a lot. If you take the default, and I'm going to just do the default here. Default, I think, is 13 or 14 maybe. If you look at the default and close it, you see it doesn't reach the overbought environment there at all. And it reaches the oversold because there was a big downward trend. So in the end, the indicator actually just stays in between the overbought and the oversold levels and doesn't add much value. Whereas if you set it for 4, firstly, there's a lot of things that happen actually. You get your overbought and your oversold. You get your extreme overbought and oversold. There's a whole lot of things that happen when you use. You even get shapes. You know, double tops. There's a double top. There's a head and shoulders. You can draw trend lines and things like that. So over time, and I'm talking years. That's where the RSI 4 favorite comes from, and that's my personal favorite. You know, a lot of people don't use it, but I can see so much more using a 4 than a 3 or a 5 or even the default, which just stays in the middle in most cases. In the market, have you any bots, success and failure in the failures? Okay, so sorry. The question is, in this market, have you got any bots that are doing well? Now, that's an interesting question. I haven't checked up on the bots. I don't watch them all the time. I'm just going to go into our live accounts quickly, and I'll just flash a few here. Live laboratory. No, not live, but live actual. Well, I'm not going to show you them all, but I can tell you now. Still not right. Oh, yeah, these are live. Okay, so the RSI has performed pretty well. I'm just going to show you this particular one. There's 4 of them. They're all positive, and I have shown this in the various videos, so it's well known. You can see the RSI is doing exceptionally well in these market conditions. We call them the RSI scalp 30, but it's actually the RSI trend. It's a trend. It's using trend settings. Again, I have shown that in various videos, but this is a real account, and you can see it's done 17% in the last 2 months, so it's doing pretty well. So there are a few bots that are that just eat these conditions up, and the make money has also done pretty well over this period. So thanks for that question, but certainly there are some bots are doing well, and the RSI is a very special one because you can trade it on a trending basis and you can trade it on a retracement basis. So thanks for that question. All right, let's see if there's any questions. All right, let's carry on. Thank you for those comments and questions. I'll just clear that one. And let's go back to the market analysis for today, which is, I'm going to start on the 4. I always start, that's my default way of starting, is on the 4-hour or the multiple moving averages to just get a feel of what's going on in the market. Well, let's go to the multiple moving average at 4. All right, so the pound is sort of drifting upwards. The Aussie is actually trending upwards, and we got caught in that correction in the trend, but it's trending upwards quite nicely. The euro is softly trending upwards. CAD softly downwards, CAD, and then the yen is in a level of insecurity. Now, when it knots, when the moving average is not, now it hasn't. There's a knot. What that means is that the long-term traders, the swing traders, and the scalpers are all agreeing that the price is right where it should be. So what then happens is that the smallest bit of news will disrupt that balance, the smallest bit of news. And when it does, it tends to be explosive. Now, you can see this consolidation went on for quite a while. And when it did, it was explosive. There's another time, it wasn't that explosive, but it turned into a good trend. So expect an explosive trend from that kind of environment. So there's a few ways you can do it. You can straddle that. And take advantage of a potential breakout, and that type of thing. But certainly that is a setup for consolidating markets. All right, so the pound yen is softly trending upwards. The Aussie yen, same as the Aussie, is trending up quite strongly. So there's either a lot of confidence in the Aussie, although the pound is going up, the euro is going up, the Aussie is going up a lot more. All right, so now we come to another negative scenario, and it is over here. The Aussie, the euro Oz. You must learn to trade this one. This is such a fantastic currency. And why I'm saying this is a negative scenario. What I do over a weekend is I look back at all the charts and I say, where have I missed a transaction? Now, this is the missed transaction for the week, the Aussie, the euro Oz. Sorry, I just want to see if there's anything. All right. So let's have a look at why I say that. You know, this is a learning experience. I've already done this analysis, so I've already tortured myself with this one. All right. So perfect setup. I mean, gosh, you don't want better than this. You really don't want better than this. And we missed it. Okay, so channel 1, 2, 3, 4. So it's a 4 bounce on a channel. That's a given trade. Then you have RSI, beautiful RSI, oversold, overbought, nice wave, and there wasn't a divergence as such, but a nice 50 line crossover right there, sell. And then you have, well, this isn't the greatest trend line, but you have a trend line there. So why didn't we enter this one? And that went 300 pips. Now, this is the kind of entry that you need for the double in a day type of trades, because it's bouncing off upper resistance. So let's have a look. Did we miss something here? No, let's go up one. Okay, there was the bounce. Actually, over there. There was the bounce. Okay, so you see, support resistance gives you entries a lot earlier than normal. Let's have a look if that level is a good level. It's not the greatest level, but you can see it did add be resistance there, support there, resistance there. So, and certainly support there. And that was a spike, so I don't tend to worry too much about it. And then it was resistance over here. So it was a good level. And by the way, this is a good way if you want to convert a 1 hour chart to a 4 hour chart or a daily chart even. You just zoom out, I think, zoom out. And there's the daily chart, there's the 4 hour chart, and there's the hourly chart. Okay, so I don't know, does anybody do that kind of thing, or do they actually load the charts? All right. All right, so there's the missed deal of the day, and you have to do this. You have to do this post-mortem. You have to look at what happened last week and look at the charts and see these things, and then you can learn from your mistakes. But that was just such a classical setup. That was, and one of the reasons is I haven't been looking at the channel trading as much as I should have. I would have picked that up from channel trading, and this was a great trade. It's a with a trend trade. You see, it's everything is just right for it. Any comments on that trade? I don't know if I'm missing comments here. Oh, there were a few other signals that you could have taken. There was another trend line violation over there. Over there, 2 candles later. If you were really, there's another resist support violation. So yeah, there's a lot there, and it's just scary that we missed that one. All right, so let's have a look if we make sure that there's nothing like this that we miss again. So, I think we're running out of time, though. All right. We're running out of time. Now, why I said that was there are times when traders have to sit on their hands and just enjoy what's going on around them, and this is most probably a good time for that. And those are the kind of times, such as round about Christmas, New Year, that kind of time. Although the market's going up and down, it's tradable. You don't actually get involved. In fact, the brokers increase the spreads over those periods. They said, don't trade, we're on holiday, we're not interested. So the brokers are also in agreement with this. And this period in April, which is actually filled with a lot of religious holidays, this period is one of those periods that it's most probably just good to take a break and not trade too much. The brokers aren't keen on trading. The and it's a religious a time, or it's a time for reflection if you're not religious or whatever. But certainly you need to get a feel of what's going on in the market and say, all right, now I'll sit the next 4 days out and not trade. And that's the feeling I have today. I know I do this a lot, where I'm just saying, is it appropriate to trade? And I'm not saying, I'm just saying the market's not conducive to normal trading, and you need to take into account that there is all this happening around you. So just be aware of that when we do these overviews. I will most probably not enter trades. You'll also see the markets going sideways in many of the currencies. That's just a sign of that the market's going to rest for a while. It could be a sign that the market's going to rest. So let's have a look at the charts. Again, here's a failed signal. Let's just take that and show you. It's a failed signal, which I'm not. Which worries me. It always worries me when a single fails. Beautiful setup, oversold, overbought, heavily overbought, went over the 50 line, went over a trend line, and then went nowhere. So I get worried when I see those kind of signals. Also, the Aussie, yesterday's Aussie was a type of failed signal there. It went over the 50, didn't follow through, and is failing. That one's nothing. That one's nothing. All right, there's a potential signal: overbought, oversold, 2 mounds, 50 line crossover. Let's have a look at that one. That's the franc. So we should see this. It's the same thing as the euro. They're exactly the same. But this one's appears to have more potential to follow through, strangely enough. So let's have a better look at this one. Let's draw a bit of support and resistance. Again, look at that bounce on support. I drew this line a while ago. So let's have a look. Where's the next? Not very good. That's most probably the next level of resistance. There. Yeah, okay, that's a spiky type of movement. So again, when you draw these lines, you've got to just be reasonable and say, look, maybe that's an exception, maybe that's an exception. If you have more touches, you see there's about 5 touches and there's about 5 touches, so those overwhelm those exceptions. So so it's in the middle between of 2 support and resistance areas. All right, I'm just going to leave this. It doesn't look, it's going sideways. So firstly, it has no momentum. All right, now here's candle. Here's where I look at candles. Let's have a look. What is that candle? Those candles telling you? What it's telling me is that this is being controlled, a controlled currency. In other words, when it wants to break out, it gets pushed down, and when it wants to break down, it gets pushed up. So it's showing that it's going through a period of control, where the big boys are saying, "Hey, get back into your playpen," and that type of thing. So again, let's stay away from that one. Okay. So I'm doing it at a fairly high level, but 4-hour overview 2. Let's have a look. All right, here's another great signal. I mean, the euro yen, great signal. Trend line violation, trend line 50 line violation, and it just went sideways. So a lot of failed signals happening here. This one, the Aussie yen is the same as the Aussie, so it's also failed there. Let's just have a look. There's no major setups that I can spot at the moment. Can anybody see anything that they like? All right, let's have a look at the daily. All right, so here's the age of the triangle. So there's quite a few triangles happening here. The euro is a good example of a triangle. Even the RSI is forming a triangle. RSI, the other reason why I like the RSI, it's a good measure of support and resistance. So it is also going like that. And even, you know, it's RSI is sometimes more obvious than the price. You can see just triangles all over the show. So a triangle is a sign of increased indecision. So in other words, when a trend happens, there's a lot of decision. Everybody's agreeing, oh, the price must go up. So when it's going up, there's a lot of decision, confirmed decision that the price should be going up. When it's going down, but when it's going sideways, people are saying, oh, we don't know what it should do. And that's a form. And a triangle is a form of indecision, like over there. And that. So there's a bit of indecision at the moment, or resting, that I spoke about earlier. And let's have a look. Aussie yen. That's a very funny show. Right. We spoke about divergences yesterday, and there is a non-divergence, which is also a signal. So when there's a non-divergence, like it's happening right there now, it's a double top normally forms a divergence. It's just, that's how the formula works. If you see a double top, the RSI should show you a divergence. Let's see if I can find one. No, that's not quite a double top. There's a double top. So that when you see a double top, it's not really a great double top, but you should see a divergence. That's almost a double top, but can't really. These are closest to a double top. That type of thing. Let's see. So the natural, the natural thing for a double top. Oh, there's a beautiful one. The natural thing for the RSI. Oh, just stop it. The natural thing for the RSI is to create a divergence. That's why a divergence is such a good signal. Just boom, boom. Okay, so the RSI naturally forms a divergence. Now, what have we got going on right now? Is we have a non-divergence, which is actually a signal to trade. It's a trend continuation signal. This particular one, we don't. It's saying what's happening, what you're seeing there is right. That's what it's telling you. Sorry, I'm just trying to see if there's any comments. Doesn't seem to be any comments. All right, so there's just a comment. What it might be telling us is buy the new high, which is happening right now. Let's go down to the 30-minute. It's already past there. It's saying buy the new high. We should have bought over there, but it's not. It hasn't run too far. Only 20 pips. So that's what it's saying. And maybe we could be looking at something like a channel like that. And let's see what Mr. Fibonacci thinks of this one. All right, now you can take it from there. there's a six. That's the Aussie. So that's already proven. There's the 61 um, bounce. Let's see if I can actually. Difficult to activate this one. Let's see if it goes from there. Still, also still saying more or less a 61 bounce. So the Aussie, the Fibonacci is actually saying that is the target. That's where the extension should go, over there. So maybe we're starting to now get evidence. You see how we can add the evidence together. You're now saying, all right, we've got a resistance breakout. We've got a channel that says it could go up there. And we've got Mr. Fibonacci that says, hey, this could be a Fibonacci trade. On the 4 hours, there's a good divergence. Okay, let's have a look at the 4 hour. Oh, the 4 hours got a divergence. That's interesting. But the daily didn't. Good observation there. Thank you. So here's a proper divergence, the real thing. So, all right, this brings us to another point is at some stage, you've got to decide what is your trading chart and what is your confirmation charts, or what are your confirmation charts. And in this case, if you were a 4 hour trader, like I am essentially a 4 hour, I use the hour to confirm things, and the daily rather to confirm things, and the 1 hour to refine my entries, and even the 15-minute to refine my entries. That's the kind of approach that I use, the old-fashioned way. But I do make my decisions on the 4 hour. So if you're having contrary signals, like the daily showing continuation, the 4 hours showing divergence, then you've got to give your favorite chart the priority. Sorry, I'm going on a bit today because we're not going to have a webinar for quite a few days from now, but I hope you don't mind. Is this a real divergence? Both are on their way up. No. It is a real divergence. Both are on their way up, but it's showing that this up is less than that up. So they don't have to be pointing down or up or sideways. It's at that point of time, that's what the RSI reading was, and that was what the price was. At this point of time, this is where the RSI reading is, and that is where the price. You just join the actual points. So the fact that they're going up has no bearing on it. It is still a divergence. A divergence is best measured when the candle closes, because it can change. So it is best measured on when the candle shows. But if you're measuring it in the moment, like we are now, then certainly that is a very big divergence. Very good question, though. I mean, it's a lot of people don't ask the obvious, which is exactly that. Both are going up. But this is actually saying, yeah, well, you are seeing it going up, but it is actually a weak up. That's what it's saying. It's not as strong. That up over there was stronger than the up you're seeing now. That's what it's basically saying. So that trend has had more go in it than that trend. And you can almost see it in the size of the candles. All right. So look, I think we need to end the day. There's no major signals coming out here. I'm certainly not going to trade for now. And let's just have a look. Pound yen. That looks. I think we've seen this somewhere before, where it's looks like it wants to go up, but I'm just going to leave it for now. Okay. All right. I think what what I suggest is let's close the webinar. Have a great break, whatever you're celebrating this over this period. I think April is quite a month for religious celebrations. I know the Orthodox Easter is actually not this weekend; it's next weekend. So there's and I think there's a whole lot of other holiday celebrations and holidays later on this month. So please be safe, and we'll talk again next week. From me, Alex Deploy, cheerio. Oh, the webinars are the booking system is on the website, so just follow the booking system. I'll just check if it's up to date. I think I have created webinars till the end of this month, so you can actually book for the rest of the month if you want on the web, on the forum website. So we must probably get together next Tuesday and Wednesday. Yeah. Okay, cheerio then. Thanks.